Hey everyone, Ruben Colombe here with Colombe Credit Repair Services, and in this video we are going to talk about why it's so important to check your credit reports. And first we're going to talk about the difference between your credit scores and credit reports because they are two different things. Now, a credit score is basically your financial IQ. It summarizes many different factors from your reports to give a glimpse of your credit status. Your score doesn't outline any positives or negatives that are on your reports. It's just a basic, like an average of, your positive and negatives, just so people can get an idea of what's on there. But from your score, they're not going to be able to see exactly what is on your reports. Now, what is a credit report? A credit report is your financial biography, and it details not only financial info, but personal info. It has addresses, previous addresses, places where you've been employed, your loans, bankruptcies, tax liens, credit cards, collections, charge-offs, it's all on there. There is more than one credit report, and there are dozens and dozens of scores. I won't even get into the different types of scores. That's a whole nother video altogether. But there are three major bureaus. There's Equifax, Experian, and TransUnion. And they all work independently, and they have a different way of reporting. And that's why you will see that your reports can be different from report to report from the different bureaus. One might have a certain collection while the other one doesn't. It's just the way that they gather information, and sometimes agencies may only report to certain bureaus, and that's why you'll see different scores, and your scores might have a huge difference, and that's just because of what's on your credit reports. Now, creditors, insurers, employers, and others can get access to your credit reports. Now let's get into why checking them is so important. You want to be aware of any negative items that are on your reports. You may have a medical collection that you didn't realize you missed the bill and you want to get that taken care of. There may also be errors on your credit reports. There might be an item listed that's not yours, or someone else used your name. There could be fraud, and you want to keep an eye on those things. Having a good credit report, obviously, you have a higher chance of credit approval, lower interest rates, and larger loans and available credit on your credit cards. When it comes to renting a home or an apartment, some landlords will check your credit. The majority will. There might be those private landlords that they don't want to pay for that, but they can still have access to your rental history. So it's important that you also have good rental history, because if you owe money to a company for a past apartment or house, that could show up on your credit report. So that's very important to make sure that you get all that taken care of. And when it comes to leasing or purchasing a car, obviously having a poor credit, either you might not get approved, you have to put down a larger down payment, or you'll have very high interest rates. And in some states, even insurance companies will check your reports. If you have a low credit score, you're more likely to file a claim. That's how they see it. And it also has more of an impact on your rates than it does anything else. And the one that really catches people by surprise is employers. Employers can run your credit. Mostly it's going to be anything in the financial institution where you're dealing with large amounts of money. And the reason is because if they see that you have, you owe a lot of money, or you have a lot of people coming after you for money you owe, you're more likely to commit fraud or steal from the company. And also, it shows that you have poor money management skills. So with any of those companies where you're going to be dealing in a financial situation, they don't want that person in that position. And not only does that come when you're applying for a new job, but also when getting a promotion. And a lot of my clients, seeing a lot more coming to me saying, hey, I'm up for a promotion, but my employer is going to be checking my credit. What can you do to help? So that's another thing you want to keep in mind. Even if you're not worried about buying a house, getting a car, your promotion, or even getting that new job. So that's a basic breakdown of why it's good to keep an eye on your credit reports. Now, if you enjoyed this information, or maybe this may not apply to you, but you know someone who it will apply to, please share it with them. You share it with your network. If you like the video, hit like. And everyone, if you have questions, you can always reach out to me and I'll be able to help you out. And thank you for watching, and we'll see you next time.